What are the investment opportunities in this tariff war? Now, in order for any one of us to answer this question, we must learn from the past history. Now, it lists out all the tariff and trade wars over the past 50 years from 1975 to 2025. With all these things that's happened in the past, did any one of these war trigger off a bear market or a recession? Now, if you zoom into this table over here, it shows the summary of the different type of trade or tariff war, right? And then we can see whether did it really trigger off a recession or a bear market. If you look at all this list, you realize that you can only see one tariff act which trigger off both a bear market and a recession. That is number 2, which is called a Smoot-Hawley Tariff Act, which took place in 1930. In fact, it was so bad, right, that it triggered off a recession, deepening the Great Depression, which took place in 1929. So now the question is, with this tariff war in sight, is there really a bear market? Now, you look at this graph over here, and as the date of this video, right, 8 April 2025, so a bear market is considered one if there is a decline of 20% or more from the recent high. So if you look at this graph, there is a drop of a negative 17.6%, which means that it's not a bear market yet. But again, moving forward in the next couple of weeks or months, who knows what's going to happen.
Singapore was part of a working global economic system. That was what helped us. What was it about that system which helped us? It gave countries, big and small, a level playing field. What is different this time is that the US doesn't want MFN. They want to dismantle the system. They want to replace MFN with reciprocal tariffs. Small countries will suffer because we have no bargaining power. The impact on us is growth. This year we were hoping for 1 to 3% growth. MTI has revised the forecast. They've just put out a new forecast today. They've put it down to 0 to 2%. So we must expect slower growth this year, a recession somewhere down the road. Maybe not this year, but quite possibly at some point.
So now the question is, if there's really a bear market, or in fact worse, a recession, what would I do? Take note that this is not a recommendation for any one of you to buy any form of securities or stocks. And because I'm not licensed by MAS and our company is not licensed by MS. So this is just for learning purpose. So this is what I would do. I will continue to dollar cost average and value average all the ETFs in my portfolio right now, including S&P 500. And of course, there's this gentleman called Sky01. He said, dude, Buffett sold all his position in S&P 500 in March. If you look at Warren Buffett's transaction shown on this portion over here, right, you may notice that the ticker VOO consists of only 0.01% of his entire portfolio, which is almost insignificant. And then we must understand that Warren Buffett's company called Berkshire Hathaway's objective is to beat S&P 500. So there's no point for him to beat S&P 500 trying to buy S&P 500. So I suspect this one wasn't purchased by him or probably be by one of his two lieutenants. So now the question is, why Warren Buffett kept recommending buying into S&P 500? Because if you look at this graph over here, this shows the American economy throughout the past history, right, since 1950. So do you realize that regardless of whatever challenges that they have encountered, including the Vietnam War and Black Monday, this overall direction has only one trend, which is up. And the reason why it's so is you may notice that no bear market or recession lasts forever. Eventually, it has to recover. And the interesting thing is, as it recovered, the economy became stronger than before, which is why, right, the S&P 500 has an average return of about 10% per year since 1950, including dividends reinvested. Now, other than S&P 500, what are the things I would consider? I think I will consider paying attention to the local banks, DBS, OCBC, and UOB, provided that their price-to-book ratio is less than 1, which means that the price they are selling is cheap. So now the question is, what is price-to-book ratio? Price-to-book ratio is equals to the price per share, which is the share price that we see every day, divided by the book value per share. Now, book value per share in simple terms, it simply means that it's the net worth of the company. Net worth of the company, that means you take what all the banks own, which are assets, minus what the bank owe, which are all the liabilities, you end up with the net worth or the book value per share. Which means that if anyone is able to buy any of the three banks where the price to book ratio is less than 1 is considered really cheap. So let's look at this graph over here, which shows the price to book ratio of a DBS Group Holdings, ticker D05. Now, if you trace all the way back, there were 5 instances where the price to book ratio is less than 1. Can you see? I think the circumstances where most people know, which took place in 2020, right, is the COVID. So do you realize that the price to book is 0.87? And then if we travel back in time, during the global financial crisis on March 2009, do you realize that the price to book ratio is only 0.45? And if you are able to buy DBS at price to book 0.45, assuming that the book value per share stays the same throughout the past many years moving forward, I think we would easily make like 4-5 times in just maybe 10 plus years. That's a lot of money, right? Now, that is only provided we buy a good business during bad time. So the last part is, in order for me to invest in anything, there are a couple of questions I need to answer. First question is, what should I invest in? Next one, when do I invest? And of course, the most important thing is, I must have the money. So in case any one of you are interested in what I do, what you need to do is you can opt in to our mailers list at valueinvestingacademy.com/ETF. And if there is any updates, we shall email you, and perhaps one day I shall see you face to face. So again, I'd like to hear from you, your thoughts about this tariff war, and if the recession takes place, what would you invest in? So comment on this video politely and respectfully, and I shall see you soon. Goodbye.